Congratulations! So you've taken the leap and decided to buy a home. Purchasing a home is driven by major life events. It doesn't matter what stage you are in life or what reason you're purchasing for. You've made the decision and I'm proud of you. Whether it's your first home, second home, or even investment home, keep watching for some insightful information on the home buying process and how to have a stress-free purchase. Hi everybody, I'm Rochen with Monarch Carolina Homes. There are so many benefits of homeownership, from a financial standpoint of tax savings, appreciation, building equity, planting roots to start a family, or even building generational wealth. Homeownership is the primary source of wealth creation among families and results in many economic and societal benefits. So what's holding you back? Real estate is complicated. Trust me, I get it. But that's where I come in. Here is a step-by-step guide to 10 steps to home buying so you can shop with confidence. Step 1. Choose a reputable realtor. Meet with a realtor who you like, know, and trust to help you make one of the largest financial commitments in your life. This agent will represent you as a buyer's agent and sign a buyer agency agreement to work together. We'll go over different types of agency relationships and our duty to promote and protect your best interests. We'll also offer transparency on commissions and how we get paid. Typically, the buyer's agent commission is paid from the seller's net proceeds, so there's no out-of-pocket expense for you as the buyer. However, each state can vary and there are some exceptions. Among our many duties, one is to be the source of information and to know basically a little bit about everything. Full disclosure, sometimes we'll also become your part-time therapist as you will share confidential information about your personal life, finances, and family. So make sure you build a good relationship with your realtor and trust their judgment and advice. Step 2. Get pre-approved. Funding your home purchase is critical to determine how much you can afford. Start saving now and budget for the money you're going to spend. Lenders will request to see proof of income such as paycheck stubs, bank statements, or the last 2 years of your W-2s if you're an employee, or the last 2 years of your tax returns and or 1099s if you're self-employed. I know it can sometimes feel intrusive as lenders will be asking for extensive financial documentation to assess your credit worthiness, but I promise you this is standard practice. The mortgage payment is based on 3 determining factors. Number 1, qualification for the mortgage. Number 2, the down payment. And number 3, the closing costs. Qualification for the mortgage. Lenders will approve your loan based on specific debt-to-income ratios and your FICO credit score. The debt-to-income ratio is the percentage of your minimum monthly debt divided by your gross monthly income. So the higher your credit score means the more favorable your interest rate will be. The 2 most common types of mortgages are FHA and conventional loans. They each have their own sets of rates, terms, and qualification requirements. Your monthly mortgage payment consists of principal, interest, property taxes, homeowners insurance, and private mortgage insurance. Principal is the amount of the loan itself. Interest is the price you pay for borrowing the money. Property taxes are due annually. Homeowners insurance is insurance to protect the house itself against casualties. And private mortgage insurance is insurance to protect the lender in the event that you ever default on your mortgage. For example purposes, let's say your total monthly mortgage payment is $1,900. Here's a breakdown of the formula. Let's say your principal is $800, interest $600, taxes $300, insurance $200, with a total of $1,900. So all these components add up to represent the monthly mortgage payment. Taxes and insurance payments will go into an escrow account each month. Think of an escrow like a piggy bank set up for safekeeping. The lender will establish an escrow account to pay your taxes and insurance. After closing, the mortgage servicer takes a portion of your monthly mortgage payments and holds it in the escrow account until your tax and insurance payments are due. So, for example, in Mecklenburg County, the tax bill is due in September. So instead of getting hit with a large lump sum payment at one time, you've been making smaller installment payments each month. The mortgage servicer will pay this on your behalf at the end of the year. Number 2, down payment. Most home loans today require an upfront or down payment amount between 3 and 5%. If you can pay more upfront, then great. You may be eligible for lower interest rate loans and shorter loan periods. The minimum down payment for FHA loans is 3.5% of the purchase price, and the minimum down payment for conventional loans is 3% of the purchase price. Number 3, closing costs. These are additional fees and costs from third-party professionals who perform services associated with the loan processing and are due on closing day. Typically, closing costs are about 3% of the purchase price. So here are some closing cost examples. The loan origination fees or commitment fees, basically that's the same thing, but that just means underwriting fees paid to the lender. Discount points, this is what you pay to buy down your interest rate. Attorney fees, an appraisal fee, home inspection fee, homeowner's insurance, mortgage insurance premium, prorated property taxes, title insurance, title search, recording fees to the county, and if the community has an HOA fee, prorated HOA fees. Step 3, view homes and find the one. So the fun part begins. After an in-depth consultation where we discuss your priorities, timeline, and limitations, I develop a better sense of your preferences and lifestyle needs. This is where we create a wish list of all your top must-haves, such as how many bedrooms, bathrooms, size, location, school district, amenities, proximity to your workplace or family are all factors to consider. I like to describe viewing homes as a very intuitive and intrinsic feeling. Purchasing a home is an emotional process where it requires your head and heart. You'll experience an array of emotions, and that's why referring to your wish list keeps a clear mind and helps narrow down your choices. If you get frustrated or feel defeated at any time, please remember these 2 key items: compromise and consistency. We may not find everything on your wish list, and it may take longer than expected. Please remain patient and be flexible with yourself and trust the process. Warning: if you're interested in pursuing new construction homes, please make sure you're accompanied by a realtor on your initial visit. If not, then the builder will not pay a commission. This is especially important if you want the realtor to continue working with you. As nice as the builder representatives are, remember, they work for the builder, not you. Their goal is to upsell you on their product as much as possible. Step 4, make your offer. Once you've found your dream home, market research will be done to determine what amount to offer. I'll speak to the seller's agent to gauge the seller's status to find out what's important to them, whether it's price, timing, or terms. If it's a multiple offer scenario, then I'll act quickly to research the market conditions, and if you feel strongly about the house, then we may have to offer an over asking price to win the deal. Some negotiation may be exchanged back and forth until we arrive at an agreement. The seller may either accept, reject, or counteroffer. When the seller accepts your offer, then you are officially under contract. Step 5, home appraisal. The lender will order a third-party appraiser to conduct an unbiased opinion of the home's value. A qualified appraisal will create a report based on an in-person inspection, researching recently sold comps, current market trends, and the details of the home to make sure the value of the property is worth the amount of money they are letting you borrow. If the appraisal comes in below the contract price, then renegotiation may take place to ask the seller to reduce the price or meet in the middle. Saving money is important, but it also depends on the bigger picture of how badly do you want this house and how much are you willing to pay for it. If the appraisal comes in above the contract price, then all is well and you just earned instant equity. Step 6. Schedule your inspection. Your realtor will help you order a professional home inspection to identify any major or minor issues. The inspector will carefully examine all the mechanical systems and provide a detailed report to uncover any potential problems that could warrant attention or repair. This step is not required, but it's highly recommended because failure to do so could potentially cost you thousands of dollars in time and money in the future had you discovered these red flags sooner. A home inspection will also help you decide if you want to pursue the purchase or terminate the contract if the house has serious problems that would cost you more than what you're willing to pay to repair it. Step 7. Negotiate repairs. Unless you agree to purchase the home as is, then you should definitely ask the seller for repairs. If the home inspection report reveals evidence of serious problems, I highly recommend only asking for items that relate to safety and are larger ticket items such as structural issues, the roof, wood rot, water leaks, or HVAC. The life expectancy of these aspects are longer, so that'll save you money in the long run if the seller is willing to repair or replace it. If the seller is unwilling to repair or replace it, then we can renegotiate the terms to ask for a seller credit at closing, a price reduction in lieu of repairs, or even home warranty coverage. For new construction homes, the superintendent will usually perform all the inspector's recommendations. Step 8. Final walkthrough. You're almost at the finish line. At this point, your due diligence should be completed and your loan approval should be confirmed. The final walkthrough is usually done the day before or the day of closing to verify all the repairs were completed in a satisfactory manner and the house is in the same condition you left it in, meaning the house is vacant, all personal belongings have been removed, all appliances are still working, mirrors are attached to the walls, no major damages, and no plants or shrubs were removed from the yard. These are just some examples to check for during your final walkthrough. Step 9. Prepare for closing. By law, you should receive the final closing disclosure, or CD, at least 3 business days prior to settlement. This will allow you to compare the cost of the initial loan estimate that was provided to you at the time of application with the final CD so you know exactly how much your closing costs will be. It's the realtor's responsibility to review the statement with you for accuracy and to notify all parties if you find errors. Step 10. Closing day! Today is the big day. Closing occurs when you wire the final funds to the attorney's office and sign all the documents required for recording. Make sure to bring a copy of your photo ID and a big smile. You'll receive keys to your new home, including the garage remote, electronic door codes, or any other associated home devices. Congratulations! You are officially a homeowner. Now, it's time to celebrate. All right, y'all. I know that was information overload, but I got a bonus for you. Click on the link below in my description for a glossary of real estate terms so you can understand all the real estate lingo. I've also included several free buyer checklists for you to have handy on various topics. Don't forget to check them all out below. If you like this video, then show your girl some love and subscribe. Thank you for watching and supporting my business. If you're looking to buy or sell a home in the greater Charlotte metro area, then give me a call or send me a message directly. I look forward to serving you in all your real estate and property management needs. Thank you for your trust, and always remember, home is where the heart is.